Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Mark Marex, Product Development Specialist with Nasdaq's Index Research Team for a review of monthly index performance. Mark, it's great to have you with us. Welcome back to Trade Talks.
Thank you so much. Great to be back.
All right, Mark, and let's take a look at the first couple of slides here because June really was quite a month for all of the indexes.
Yeah, I mean, we really track quite a number of indexes at NASDAQ. I think at last count, it was something like 40,000. So we didn't look at all of those, but, you know, approximately the 50 to 60 most important ones that we think about on a daily basis, pretty much were all up for the month of June. Natural gas index was the one outlier that was meaningfully down. It was down about 10%. As you can see, it's an index that is prone to being down. It's down 96% in the last 10 years and is often an underperformer, not really indicative of what's happening in the broader market at all. Most indexes that we track that were down by less than 1%. On the flip side of that, we can see copper, which is maybe more of a macroeconomic growth indicator, up very strongly, 12% best performing index of the ones that we track in our monthly performance report. And then I'd also like to point out within our featured index segmentation, the second best performing index overall, QNet, which is the Nasdaq Internet Index. Really telling the story and continuing to tell the story that the rally this year, post-March, has been driven by tech, even though we've been hearing a lot recently, right, about other areas of the market rallying as well. Areas like the Nasdaq Internet Index continue to lead. You can see just underneath it, the Philex Semiconductor, pretty much almost as good in terms of performance. Nasdaq 100, 6.3%, and then the Nasdaq Composite, 6.0%, pretty much right there in line.
And if we take a look at your second slide here, we have a nice macro snapshot of what's happening globally, including emerging markets.
Yeah, sure. This is instructive in terms of us trying to get a sense of, globally, is there a headwind in terms of performance outside the U.S. When we're thinking about indexes like the Nasdaq 100 or the Composite? Obviously, they're pretty heavily weighted towards the U.S. And if we look at, on a global basis, our global benchmark was up about 3%. Developed markets up about 2.5%. Within the U.S., that was split around 2 to 2.3% for the large and mid cap space, and small caps actually outperformed at over 4%, almost 4.5%. You can see that at least within the U.S., it was more of a small cap story if you're looking at all different capitalization segments of the market. And then in terms of developed versus emerging, 2.5% developed, 7.6% emerging. That's one of the sharper divergences in performance that we've seen recently. Emerging markets have been a pretty consistent underperformer for quite a long time. You can see that over a 10-year basis, they're up just about 11% versus developed markets up 10 times that amount over a 10-year window. Similar story on the 5-year, the 3-year, et cetera. So certainly an encouraging sign to see it's not just the U.S., it's not just tech, even though those are leading the market. You're seeing a broad-based recovery in smaller caps within the U.S. and outside the U.S. in emerging markets.
All right, and Mark, let's wrap here with your final slide, taking a look at the Nasdaq Biotech Index versus market benchmarks.
Right. So this is actually a visual of the QNet Nasdaq Internet Index that I pointed out earlier. Second best performing index overall. Actually, funny enough, the Biotech is probably not far behind because it's been a relative leader most of the year as well. But we wanted to just kind of emphasize here, again, that point of whether you're looking on a trailing 1 month or trailing 12-month basis. In this case, looking at a year-to-date basis, you can see that purple line for QNet has been right at the top or near the top pretty much all year. It led into the market peak in February. It led on the way down towards the market nadir in March, and it's been leading out of that market bottom into new all-time highs. And again, just emphasizes that, you know, as much as we're hearing about other sectors recovering, it's still, I think, broadly a tech-driven, tech-led rally. I think if we continue to see tech doing well, we will continue to see the market overall doing well. And that's something we're very excited about within NASDAQ, given that we are pretty much the home of thematic tech.
Yeah, we certainly are.
That's the story.
All right, Mark, great to have you with us as always. Thanks so much for joining me on Trade Talks.
Thank you. My pleasure.
All right. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.